You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back one final time here this week for all you on-demand folks. Yes, it is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com. Of course, the place to go for all of the great content outside of these shows. You want to read some great articles on usual activity, all the earnings, vol stuff we put up there for free because we like you folks. It's all there. Then, of course, you want to go above and beyond. You want to get additional content. Let's say, for example, you don't want your broadcast week to end with volatility views. You want more in your life. You want to break down the mad week that was from an unusual activity perspective, maybe discover some trades you may want to add to your portfolio or some you maybe want to avoid. Options Oddities got you covered there. Of course, pro Q&A sessions, live access to this, everything else we do. We're coming up against it pretty soon. In a couple of days, we'll be giving away the May Pro Trading Crate. So you want to get your name in that hat. It's easy to do. Theoptionsinsider.com/pro is the place to go to learn more about that as we learn who is joining us on the old program today. First, let's go out to the dark, the stormy, the turbulent shores of Maine, where we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. Rock Lobster, welcome back to the program, sir.
Hey, it is good to be here. I'm excited. It is windy, but it is not super stormy. And I know you're like, that is just lies. But it really, it can be pleasant here. And no clam pirates, but I'm expecting them to roll in here today because it is a relatively nice day to go clam pirating here in Maine.
And I hear a rumor that Mama Lobster, no fan of mine, she thinks I cut off her precious pumpkin. I do not let him speak his mind on the program. Is that correct, sir?
That is correct. And I quote something like, and you tell that Mr. Longo not to cut you off when you're talking.
That's hilarious to me because I think I give you the most rope of anybody. I let you have unchecked soliloquies for days upon, and I've heard about it on the other end. I push back against those people. I say, nay, let the rock lobster do himself. But now, apparently, I have upset Mama Lobster. So now I need to rethink everything here.
It was making me giggle quite a bit. I believe, actually, in your defense, and the listeners know, it's rare I come to your defense. Rare, like a meteor rare. Meteor hitting the earth rare. And I said, it could have just happened in the editing, Mom. She's like, I don't know. So anyway, that's...
There we go.
The so
lost one subscriber. Mama Lobster off the list, unsubscribing. She's not going to put up with that nonsense with her youngin, her pudding. Not going to happen here. Just goes to show, no matter how old you get, your mom is still your mom. at the end.
There's a lot of truth to that.
All right, let's see. Hopefully his mom doesn't listen. Otherwise, you might get in trouble as well. We are joined today, holding down the hot seat, Mr. Jim Carroll, the Senior Vice President and Portfolio Manager at TOROSO Advisor. Mr. Carroll, welcome back to the show. And does your mom have any hate mail?
No, nor my wife, for that matter. But then again, she doesn't listen.
Here we go.
And I guess I have Andrew's weather because the coast of the Carolinas is dark and stormy today. So, we might have to find the dark and stormies at cocktail hour tonight.
Dark and stormy shores of South Carolina. There you go, listeners. Volatility views angering moms and significant others for over a decade as we keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Let's do it. Let's dive right on into the Volatility Review, the portion of the show where we break down the week that was and indeed still is right now from a vol trading and trending and analysis and unusual activity, all sorts of fun perspectives. And coming into this Friday before a long holiday weekend, usually you see watching kind of paint dry, not much going on, maybe vol kind of slowly eroding. Not so much today, at least from a nothing happening perspective. The market still just caught up in the effervescence that is NVIDIA/AI week, call it what you will. That explosive move in NVIDIA yesterday really just caught a lot of people off guard, also just added to the fire that is AI furor out there right now. We were joking not that long ago on the network about who would be coming in to scoop up NVIDIA. It was already at about 180 plus PE. And now, pshaw to that, all such talks of such banal concepts as price to earnings out the window. It's buy AI at any price week out there, listeners. So yeah, crazy stuff. Market's still joyous. Of course, we had a little thing called, some inflation numbers this morning as well. But who cares about that? It's all about AI mania. S&P back up over 4,200. Not too long ago, we were 100 points in the other direction, listeners. Up about 1.3% again today. So 2 strong days out there in the S&P on the back of this just AI madness. We won't get into discussions of breadth here. We said it many times. It's really a handful of names strapping the market to their back and just carrying it north. You take out those AI heavies and not a heck of a lot of upside to be found. But you know what? We'll look past that today. 1.3% to the upside today. The Dow up. The Dow's usually been the straggler this past week. Days when everything else is up, the Dow's been losing ground. Today, the Dow finally deciding to play along as well, up nearly a full percent, about 0.95% right now. And the NASDAQ saying, get out of here, kids. I'm going to do my own thing. Up to almost 2.25% right now. So rally ho mode in all the markets. Of course, maybe some news on the debt ceiling front. That kind of news goes back and forth. So hard to read too much into those tea leaves, but perhaps some optimism to be found there as well. A lot of stuff lifting the markets out there today. That means as we kicked off the show, we got our old friend VIX actually up heading into a long weekend, which is kind of interesting. Up about exactly a point when we kicked off the show at about a 1780. VVIX 97 up about 2 points. So still looking fairly frothy, all things considered. VOLQ 19.25 up about 2.25 points from where it was this time last week. So a lot to unpack. We'll go around the horn the opposite of the way we started. Let's go out to the dark and stormy shores of South Carolina. Mr. Carroll, sir, first off, how many NVIDIA calls did you have in your back pocket this week? That's all anybody cares about. And then B, if you have time, what'd you see in volatility, sir?
So I have 2 NVIDIA observations. One is that apparently Kathy Wood at ARK had sold out of all her NVIDIA before the earnings report.
That's awesome.
Which I thought was just hysterical. And a good buddy of mine who does a little bit of swing and day trading bought NVIDIA the day before earnings announcement. So that worked out pretty well.
There you go. Drinks on him, sir.
Yep.
Or perhaps new cars on him, whatever he feels like.
Exactly. The other thing I'm noticing is that Russell Rhodes has a chance of winning last week's crystal ball if I have my numbers right. with VIX.
Yeah, he's at a 17 and 3/4, so he's looking pretty darn precise right now, which is a rare thing for Mr. Rhodes. He's always struggled with the crystal ball for years now.
Well, I hope his ears are burning.
Maybe we'll put out a little tweet to let him know he's close, just to make it hurt that much more if he misses at the end.
But in terms of what's lighting up my tape this week, I still hear too many people whining about VIX being too low and broken. What I see is that, the futures term structure is in a pretty steep contango. Realized vol, a month ago was below 10 in the S&P. And, people think that for some reason, just because we've got a bunch of squabbling going on in Washington, D.C., that VIX should be, I don't know where, in the 30s or something. But there's really no rationale for it based on how the S&P is trading, based on what its vol has been, based on what the term structure looks like. So all you whiners out there, please shut up.
Jim getting a little feisty. I like it.
I'm trying to bring the heat for you, Mark.
It's all that stormy weather. It's got you hot and bothered down there. So.
Yeah, exactly. So I'll stop there for the moment.
So to wrap up, Jim didn't have any NVIDIA calls, and everybody needs to shut up. All right.
Exactly.
That's his take on vol for this week. Everybody shut up. Might be a good title for the show. Everybody just shut up. I like it. All right, Mr. Rock Lobster. I know Mama Lobster wants me to shut up, so I will do so right now and let her precious pudding speak, sir. What do you got for us?
Precious pudding. That I realize the opening for nicknames now has just become unlimited for you. That
Mama Lobster.
I had a feeling it was going to be a net lose for me, and now I'm convinced.
She's the gift that keeps on giving, Mama Lobster.
Yes. Anyway, before I laugh my way through the whole show, I owned one NVIDIA call. That was it. And then this guy I follow, I love following people on Twitter, right? So I love this one guy. What is his name? Sam Parik. Anyway, I can't pronounce it anyway. Parika, something like that. Anyway, he's been a freaking bull on it. I give him credit, man, and he went all in. You don't normally buy the 30s or 40s for like $1 or $2, and they go to $50. So I have to say that was the most impressive thing I've seen on Twitter, because he had been talking about it prior to. But I just thought actually what was quite surprising was how low the vol was into the earnings. I mean, the earnings straddle was $20, and I mean, with all the stuff in AI going on and how the Qs have been moving, and that, to me, I think that was the lowest print on a relative basis of the NVIDIA straddle I think I've seen in a while. So really, really bizarre how cheap. And anyway, that's why I bought it. I figured, the straddle's $19.85. I still got 3 days to expiration, and we could be down another 2% in the Q or up 2% in the Q in a day. So like it would, the straddle would at least, I don't know. I didn't see a lot of risk in the straddle basically. But it's just a normal size trade though. And I used to, I still do that as a trade. When I think basically, I think a good earnings trade is when you could buy juice and you get the earnings cycle as basically a freebie. So you're not spending a whole lot more than you normally would for the straddle, or even less. And you get the earnings cycle for nothing. So it's kind of the same risk as if you buy a straddle and you try to trade it, get out of it for more money. And sometimes they just trade cheap just because for whatever reason, nobody wants them, or, they want something else. Like, they want the 340s or the 350s. So anyway, so that was my big NVIDIA. That's my big NVIDIA story. And also, as far as, it does have a little bit of like the 1999 thing going on, right? AI is the market's just basically going to the AI stocks, or what they've deemed AI. It's even dragging Netflix up somehow. I don't know what the reason, although Netflix is now going to charge everybody, so their earnings are probably going to double overnight. So that almost feels underpriced. for some reason if people are actually going to start paying. But all money is piling into AI. And it's just like everybody piled into internet stocks at the beginning and nobody really knew, right? So now you know that Wall Street in the next year or the next 2 years is going to producing more AI startups than we have ever seen in forever. So you know that's going to happen for sure. And then eventually, like all the benefits of the internet, all a zillion things came out of it that we could have never imagined, which is probably what's going to happen again. And yeah, there's definitely one thing that seems pretty certain is that you really need the computing power to grind through the AI. So like all of the GPUs that NVIDIA basically created that market. AMD has answered, so that's why you see AMD up. Intel, I'm still trying to figure out why that CEO has a job. Like they literally they're asleep at the wheel of the largest chip boom in history, and they don't even have a product for it. Like what the heck are they doing? So anyway, that's an odd one. Like you got a whole company that makes chips, and you're like, okay, I guess we don't need to make these things, or they don't have any high-speed computing chips. So anyway. At least the way the Intel market price is right now, from a vol point of view, yeah, I agree with Jim. Like everybody, what's funny is, and I see Jim on Twitter all the time. You see all these people tweeting stuff about VIX and all this kind of stuff that have never traded a contract in their life. I don't they don't know. It's like VIX is basically, I think it's all just upper statistics or math. And my statistics is a little rusty. At this point, I just call myself an old guy meatball trader because I was a floor trader for a long time. And I saw how vol worked. And that's basically it. I had a couple of simple tools and they threw you in a pit and said, don't blow out. And that's how we all learned. So, but from a VIX point of view, I think it has been actually trading or tracking the vol that it's supposed to track pretty well. We can't really get below a 15 because realized vol doesn't stay, like Jim said, it was in the 10s for a while. And then we had that bank crisis and it blew up again. So I think VIX is doing what it's supposed to do for a 30-day vol. And I tell anybody that wants to listen, if you want to learn how to trade VIX, look at the 30-day straddle and tell me what you do. If you want to sell the straddle, you're a buyer of VIX puts. If you want to buy the straddle, you're a buyer of VIX calls. And that's, and that's how you start trading it. So you have to figure out, you got to put yourself in the shoes of a liquidity provider. Now there's much more nuance, to how VIX works, and like the skew will kick it up and there's all kinds of other stuff. But basically, right, you have to learn how to price vol and straddles if you want to trade VIX. So look at the 30-day straddle. And I kind of, for me, if you want my trick, I kind of work it in 10-point increments. Like 150, it's 150, 160, 170, 180. And how long is it going to stay there at those prices? Then you get a better idea how to trade the underlying, or at least you understand where the cash is going, and then you got to understand how to trade the futures. So, but I don't know. I think we have a debt crisis looming. We have potential meltdown of the Western civilization, and VIX is 1775, which I find ironic. It would be really nice if it closed 1776 today, just for some poetic justice for the knuckleheads in Washington that can't seem to just pass a simple budget. 60% of Americans want a debt deal with less spending. I don't know why it's even that hard at this point, but anyway, I digress. So from a vol point of view, I think the vol's fairish, at least. You've got a 2.5% rally in the Q, and a 2.5% rally is like over like a 40 vol. Like, how low can vol get when the Q vol is 40? All these products are linked to some degree. And, SPX is up 1.25%. So that's a 20. That's a 20 right now. And VIX is only 1775, discounted for the weekend, 3-day weekend. So anyway, that's my rant for today. Where does it go next week? We'll have to wait for the for vol views, but I will give my I am trying to work July strangles again. So I've been able to trade out of a lot of my June already. I still have some June puts on because I think we're going to see a vol low, to be quite honest, by mid June. We'll see the lowest vol print of the year in VIX. That's my call. I don't think we're going to see it for the crystal ball, but I think we will see that number. Mostly because of the euphoria in tech. And that's how vol gets lower, is the market latches on to something to be bullish about and it does not let go. So as of right now, that looks like tech, and whatever remnants of tech I have in my portfolio, I'm happy about today. So there we go. That's a relatively happy day for the Rock Lobster.
Hey, I want to make sure you're completely done. You vented your spleen. I don't want any irate emails from Mama Lobster that I curtailed you too soon. So you have said your piece, sir.
I have, just for confirmation. I guess I'm going to have to tell my mother to listen to Vol Views.
There we go.
Today, just
now
so
she can listen to Vol Views. She'll be happy. She'll have to resubscribe to do that. I'm not sure if she'll be willing to make that leap. But there we go. Got to let Puddin' say his piece. There we go. He's happy now. Mama Lobster is happy. All is right with the world. Let's keep on rolling out here to the land of VIX futures. And, listeners, if you were hoping for some massive evolution out here in the VIX futures term structure this week, I am the bearer of bad news. Not a heck of a lot unfolding this week. As we kicked off the show, and as of really a few minutes ago still, June future down slightly, down about 1/4 of a point. The July future was pretty much literally unched. So not often do we see that, but that's kind of the week we have hanging out there right now, just kind of hanging out, treading water. You still have that chasm between the cash and that June future. But once you get past that, we've had that for a little bit now. It is very, very analogous term structure to what we were talking about this time last time. Mr. Jim, I know you're not talking to us. You're out there watching the VIX futures term structure, sir. Anything catching your eye out there this week?
Well, as one of my Twitter friends, Darren, pointed out earlier today, anybody who's trying to hedge themselves or speculate on a bad outcome from all this debt ceiling stuff has been nicked, cut, poked, stabbed, whatever analogy or whatever metaphor you want to use, because that term structure has been a headwind for anybody trying to be long vol. And really the trade, going back a couple of months now, has been the short side. So, the term structure is lower left to upper right, and that favors shorting those VIX futures. And that gap, between the futures and spot, looks pretty tasty right now.
Yeah, you're right. That chasm, we've been referring to it for a while, is pretty large still. And you're right, that does make it a significant impediment for those. And even this past week, we saw a little bit of a pop out there in the cash. And you had a few moments there where it seemed like some of your upside might have worked. But again, we've said it before, we'll say it again, listeners, those moments are very short-lived out there in the vol space. If you have some vol upside, you get moments like we saw flirting north of the 20 handle again not too long ago. Maybe a time to let some of that upside fly, because it doesn't hang around that often, especially in a week like this where we're heading into a long weekend out there. Mr. Rock Lobster, same question for you, sir. Anything catching your eye out there in the vol surface? And are you two still eyeing this massive gulf between the cash and the front future, sir?
Yeah, I'm trying to buy it right now. I'm trying to buy as many July strangles as I could possibly get my hands on. So I'll do like a full allocation for sure. So my strangle is long the in the money put and long the call spread. And you just got it. And here's the trick. I'll give everybody another trick. When those VIX puts pay the bills, you got to make sure you take them. As much as I think vol might go down to 14 or 15 once they start paying the bills, don't forget to close them. Because we are not going from a 12 to 18 vol market. We're going from a 19 to a potentially 16, 17, or 18. So vol trades differently, in my view, from the top down to the bottom up if you're a trader, because your expectation on the low end is different. So you have to be a little more. You have to be a little more diligent about your put closes. In the old days, in those great days of 2017, 18, 19, 12 was a good target, 12, 11 or lower. And we haven't had that in 3 years. So I would just say, as much as those lower VIX numbers could be tempting, we have not been able to keep a sustained rally in a year. We're just back to where we were last year, basically. So I think on that score, that's why I like the July. So I think, there's good steepness. That steepness gives you a pretty free ride if you're interested in taking it. And a lot of people don't have the patience, though, to sit on a position for 2 weeks and wait for it to pay. But I'm old. I'm not doing anything anyway. So what the heck? I'll just watch the puts melt to the strike or melt to the cash and be on my merry way.
There you go. Otherwise, you'd just be sitting around waiting for death anyway. So why not watch your strangle?
Exactly. Might as well watch the strangle.
A little more fun. A little more exciting. Let's see if there's any excitement out there in the land of VIX options, listeners. And, for the most part, it has had the whiff, the air, the flavor, if you will, of a pretty much lead-in to a holiday weekend. Hasn't been the most banger of weeks, with the exception of Monday. We'll get into all of that in a little bit. Today, looking fairly light as well. But then again, we are heading into a long holiday weekend, so it didn't come into today with a whole lot of expectations. If we hit the ADV today, it'll probably be surprising. Right now, 373,000 contracts on the tape. The ADV, 774. That's down a little bit from this time last week, down about 13,000 contracts. Once you hear me break down the numbers for the week, you'll understand why that is. Let's get out to the top 10 out here, listeners. Let's see if we can find a little bit of Where's Waldo with some puts. There's a few more to find now. There's been one forever. Now there are, dare I say it, clutch my pearls. There are two. There are two puts in the top 10 right now, listeners. Read into that what you will. One of them's easy to find. It's number 10, 194,000 of the June 15 puts. So some love. Last month, it was a 17 strike. That was all the rage. These days, it looks like maybe the 15 strike. We'll see. Maybe we'll have some other put friends to talk about in a little bit. Number 9, 198,000 of the June 23 calls. Number 8, 203,000 of the SEP 35s. A lot of interesting upside has gone up in SEP over the last few weeks, and the 35s holding down the number 8 spot this week. Number 7, our second and final puts in our top 10, 211,000 of the June 18 puts. So there we go. I guess we migrated from the 17 strike last week to 18 and 15 this month, listeners. We'll see which one of those is the winner. Maybe we'll see some more puts flocking into the top 10 next week. We shall see. Number 6, 212,000 of the June 40 calls, 4-0. Number 5, 230,000 of the June 25s. Number 4, 267,000 of the June 27s. Number 3, 298,000, just a hair under 300K of the AUG 60s. Not to be outdone. Number 2, 322,000 of the SEP 60s. So we're getting back to a little bit of that 60 strike action. And number 1, 393,000 of the June 30s. Man, compare and contrast this top 10 to what we had a year ago on the show, which is a very different beast. Obviously, volatility, structurally different. We were much higher then, too. So that accounts for some of the, shall we say, outlandish strikes we were seeing. But we were mostly 60 and above this time last year. 60s, 75s, 90s, pars, 115s dominating our top 10. These days, outside of a couple of 60s, we have mostly, dare I say it, expected and or reasonable strikes out there. So what a difference a year makes. Also helps to have VIX now back in the teens as opposed to flirting with a 30 handle. So again, all those folks, getting back to Jim's point earlier, everyone needs to shut up. I won't say that, but I will say that it is a very different beast, VIX in the teens versus VIX in the high 20s, low 30s in terms of how much movement you can get out there at the end of the day. Also, obviously, how people are positioning as a result. Speaking of said positioning, not a heck of a lot going up today. As we said, right now, 373,000 contracts on the tape. The big dog, about 27,000 of the aforementioned June 18 puts. Is that going to be our put strike du jour? I guess we'll find out. Number 2, 24,000 of the June 30s. Number 3, 22,000 of the June 21s. Number 4, 20,000 of the July 22s. And rounding out the top 5 today, 17,000 of the June 17 puts. So 18 and 17 puts making it into our most actives today. Yesterday, a little bit more paper on the tape, but not much. 466,000 contracts. That may surprise you on a day when everything just exploded to the upside. You might not see a little more paper in VIX land, but we did not, listeners. Only 466 on the tape. The top position yesterday, 45,000 of the AUG 21 puts, followed by 45,000 as well of the June 17 puts. So maybe some roll action there. Number 3, 23,000 of the AUG 24 puts. Number 4, 17,000 of the June 16 puts. And rounding out the top 5 on Thursday, almost 17,000 of the June 20 puts. Wednesday, 717,000 contracts on the tape. The big dog on Wednesday, 70,000 of the June 18 puts. So it was kind of a put palooza on Wednesday, followed by number 2, 35,000 of the June 19 puts. Lines up nicely. Put 1 by 2. I'll have to dig in to find out. Number 3, 30,000 of the July 19 puts. So it could also be some straight up rolls going on there. Number 4, 29,000 of the June 16 puts. And rounding out the top 5 on a decently active Wednesday, 26,000 of the June 30s. Tuesday, once again in the doldrums there, 435,000 contracts. The big dog, such as it was on Tuesday, 43,000 of the June 25s. Number 2, 27,000 of the July 30s. Number 3, 26,000 of the July 25s. Maybe some vertical action there. Number 4, 21,000 of the June 35s. And rounding out the top 5 on a fairly light Tuesday, 16,000 of the June 50s, 5 O's. Intriguing. And Monday was the banner day of the week, thanks in no small part to massive paper going up on our 2 favorite strikes, the June 30s and the June 40s. By the way, 967,000 contracts on the tape for Monday. The big dog out there on Monday, listeners, 231. So not quite 2X, but pretty close to the number 2 here. 231,000 of the June 30s, followed by 167,000 of the June 40s. So that vertical has been a fascinating one to watch. I know when it first went up, listeners, there was a lot of consternation about it, a lot of hand-wringing. Why would someone put up a long-term VIX upside spread that way? I know Mr. Rhodes was on the show, and he clutched his pearls. He did not like it. There are many ways he preferred. I think it went up back around the February time frame, maybe earlier, and the first time at least. And so all of his Substack has been talking about better ways to put on upside in VIX as a result. So, but it has been intriguing. Some folks have come on and put it on the other way. I'm just going back to check. And the paper this week, that was additive on the 30s. They added about, that was opening paper again. So intriguing stuff out there. A lot of volume this week on Monday here, even though the OI only jumped by about 100,000, even though 231,000 going up. So we have seen people in the past come and take the other side of that, sell that vertical too. So maybe some of that was inspired. Either way, 231,000 of the June 30s going up on Monday, followed by 164,000 for number 2 of the June 40s. So that spread has been dominating our upside for a while, continues to do so this week. Number 3, 83,000 of the June 27s. Number 4, 50,000 of the June doubles, and rounding out the top 5 on Monday, 33,000 of the July 35s. All right, Mr. Jim, that's a lot of activity to analyze here, sir. What, if anything, caught your eye out there this week? And what is your thought on this ongoing saga that is the June 30-40 vertical, sir?
Well, it sort of makes sense if you think that things could blow up around the debt ceiling debate. But what seems a little weird to me is that from day to day, you're kind of flip-flopping between puts and calls. And so I'm not quite sure I have a clear picture of who's doing what to who out there. And it'll be really interesting if we get a repeat of 2022, where anybody who bought VIX calls got punished. And if Andrew's right about where we'll be sort of a month from now, I hope these guys didn't pay too much.
Yeah, the old June 30-40. I guess if you want to take an upside flyer, I like it better now than I did back in the January timeframe whenever it first started going up. A little bit closer to the fire now, get a little bit more bang for your buck on that, even though I don't think June 30-40 would be my first thought for playing the upside debt debacle, but c'est la vie. Mr. Rock Lobster, what are your thoughts out here on the relatively anemic VIX paper this week, except for Monday? And have you put on any of this June 30-40, your most beloved spread, sir?
I'm just waiting for 50 Cent to come back. When is he going to when is the greatest VIX trader ever gonna make their?
Did we ever just determine decisively if it was him on the 50 strike last month?
I did not. So like many things for me, I try. I put the idea out and then I forget to follow up like 3 seconds later. So, which of course is a problem. But other than that, one thing I was just looking at. One thing we haven't seen in a while, which as far as paper goes, is I've just been noticing a little bit more volume on the put side. On the downside, there's a little bit of a bid now. So if you go to the June cycle, there's a penny bid for the 14s, and everybody's like, penny bid, who cares? But 15s are a nickel bid. I'm not saying that is a ton, but it is trading. The 18 strike, all the stuff is a little bit alive again. So I'm saying, hey, this is a real. I just filled my first tranche of July. I'm trying to not get too giddy. It usually takes me about a week to get a whole position in. I have learned the hard way trading VIX that, we see the vol now, and then after this debt ceiling goes down, the July vol will be down 4 ticks, 5 ticks. But I have seen some put volume going up, and you also have to understand, I think, from a volume point of view, where's the volume going? Like if you're, there hasn't been a big move in SPX. I mean, we pretty much vacillated, right? 4,100, 42, 41, 42. So, and VIX hasn't done very much, which generally doesn't lead to a lot of paper. And I think just a lot of papers, more of it's been going to what's moving. And, VIX hasn't been moving, but NVIDIA and AMD and Google and all that stuff has been moving. So that's why I think you get probably a little bit of anemic vol paper right now. But you can fill midpoint in July in VIX if you so choose. So that is my big story, and I'm sticking to it.
Now a little flash poll here for our audience. So if you're following us live, you can get a chance to sound off. If you're listening to the podcast, we'll keep it live for a little bit longer, listeners. So you folks on the podcast side get to play too. I get it. Not everybody has the time or availability to listen live right now. I see someone complaining on Twitter. Why isn't it available? It is available. It's a podcast. But if you want to listen live, you got to head on over to the pro side. But we'll make this available because this is a contentious topic, this June 30-40. It's trading right around 35 cents right now if you wanted to buy it or sell it if you were so inclined. I don't know who wants to sell that for 35 cents, but I mean, crazier things have happened. So I'm curious out there, we'll put it out to you folks. Are you buyers of that vertical right now ahead of all this debt ceiling brouhaha? Or do you think there are better ways to load up on some upside? Maybe, perhaps, your preferred vehicle to play some VIX upside or downside, your call, is our old friend SVIX. When we kicked off the show, it was at a 20 even. That puts it up a whopping 0.2 of a point. It is now at about a 1990, up about 1/10 of a point. So almost literally unched on the week. So not getting a heck of a lot of love out of SVIX, even though you had a little bit of a better range on the week. We got as high as, how did we get? About 20.5, almost 20.41. Then the low came 18.61. So not quite 2 points, about 1.8 points out there for all things SVIX. And a lot of you have lamented the lack of weeklies. Mr. Rhodes was complaining about that last week as well. That's just kind of the deal right now. Not really getting all the choices, all the options we want, pun intended, out there for SVIX, which is probably contributing to the anemic volume growth out there. Only about 700 contracts on the tape today. The ADV moving slightly in the right direction. 1,300 a day now, up about 100. In terms of top positions, let's just do a top 3 out here because not much open really. The big dog, 1,800 still of the June 8 puts, followed by number 2, 1,100 of the SEP 35s. We've talked about that before, the two very contrasting positions at the top there for SVIX. Number 3, 1,100 of the June 18 puts. So not a heck of a lot lighting up the tape out there. Let's go on out to the sibling product out there, which is UVIX. It was at a 930 when we kicked off the show, puts it down about 0.4 of a point. as we're getting into the latter portion of the show here, is at about 9.5. That puts it down a whopping 0.2 of a point. So again, not exactly a rock'em sock'em robots week out here for either of these two products. 7,200 contracts on the tape today, which is decent. The ADV is about 11,000, also moving in the right direction, up about 1,500 contracts. In terms of big positions out there, I'll do a top three out here as well. Number one, 5,600 of the May expiring today. So these will obviously be gone next week, listeners. The 10 calls, not looking great for these. Usually these things, people are buying these. It could be overriders, in which case they're happy, but it passed its prologue. Probably not, in which case probably got some sad faces here at the number one spot. Number two, 3,200 of the June expiring next week on the second, 9 calls. So interesting action there. Number three, 3,100 of the June expiring, just the monthlies, 9 puts. So 9 strike, attracting a lot of attention out here as well. Mr. Jim, anything catching your eye out there in the VIX siblings, UVIX and SVIX, sir?
Well, what I've been paying attention to is that they've started to pick up a little bit of market relative to the incumbents. It's been a while. They've both been around now for a little more than a year, and SVIX is gaining some ground. UVIX is definitely gaining some ground on UVXY. Now, UVIX does have some weekly options. Not exactly the deepest markets in the world. And as you pointed out, SVIX doesn't. The short side, the SVIXY option markets, have never really been as deep as the levered long guys, because the possibility that you get, action in either direction in those levered long products is much higher. The other thing that caught my eye is that VXX, the much reviled Barclays train wreck, has been picking up steam again. Its dollar volume in the last couple of months has been trouncing VIXY. Its brother-in-law, or whatever you want to call it. They're both the 1X longs. So Barclays seems to be making a comeback. And it'll be interesting to see if they can keep that momentum going.
Interesting. Jumping me right to VXX, but I can do that dance if you want there, Mr. Jim. So I know you watch VXX. You're like me. I think you kind of kept your distance from it during all of that madness, that brouhaha. But now, as you mentioned, it's starting to get a little bit of steam again. Right now, 35.60, down about half a point on the week, listeners. Jim, is it starting to entice you again? Are you maybe going to start playing in those waters again, or are you just done with this product?
Well, it is certainly on my radar. It is certainly on my list of volatility exchange traded products that I may or may not use in my day job. But I'm definitely paying more attention to UVIX, SVIX, and watching them try to pick up some ground on the guys who've been around a lot longer. We could wake up tomorrow and Barclays could do something stupid again. So I think VXX still is sort of got the scarlet letter on it.
Yeah, whenever I think about this thing again, I feel like a bit of just an abused spouse, right? This thing has just taken advantage of me time and again. I've washed my hands of it multiple times. And then I start doing what you're doing right now, Jim. I start looking at it again and saying, oh, it's not that bad. It's doing volume again. Maybe this time will be different. And then, of course, you're right. Barclays just steps up and smacks you in the face and says, there you go. That's what you get for all of your faith in our product. Right now, listeners, 80,000 contracts on the tape, so somebody's liking it out there. The ADV is 47,000, moving in the right direction, up about 5,000. Now, again, take that with a huge grain of salt. I mean, VXX, there used to be days when VXX used to outstrip VIX options easily. We used to call those tail wagging the dog days here on the show. I don't think we're anywhere close to that again. VIX is threatening 800,000 contracts a day. VXX is struggling to hit 50,000 a day. So we're nowhere near in that department yet, but still intriguing stuff. Maybe that's another good question of the week. Are you back in the in the realm of the orbit, the black hole sucked in of VXX out there. Let's see. Right now, today, 11,000 of the 35 puts expiring today. That's the big dog trade out there, followed by about 9,000. Look at this, right behind it. Right behind it, the second most active contract today in VXX. 9,000 of the 70 calls expiring next Friday. 70s. There we go. Mr. Rock Lobster. How's that for your debt ceiling play? 70 calls in VXX expiring next Friday. You down with those?
I love showing my students the charts of what happened to VXX into the the COVID crisis. What did it go from like $20 to like $200 or something like that? I can't remember. It was a pretty big. And then UVIX or TVIX, that was a good one. Went to
TVIX was TVIX was a 20 bagger.
Yeah, it was like, but I just reminded them it only happens once a decade. So take that with a grain of salt. Like, this is gonna. You guys remember Sanford and Son? Fred Sanford, Red Fox. Come on, Elizabeth, this is the big one. I always think of that. Everybody piles into TVIX or VXX like this is going to be the big one, and then they're all disappointed, and their life becomes a tale of sadness and woe. I just say I did buy some SVIX calls. I did put on the debt ceiling limit trade. I bought some SVIX calls, the 20s, and I bought some SPY put spreads to take advantage of that huge skew. I think like the 400 390 put spread was $1. So I actually put that trade on for $2. So like June cycle, and then we'll see what happens. Like anything, we'll see what happens. But SVIX is becoming more interesting. I like the short vol product as a bounce trade. If you're an investor and you just want to hold on to it, as vol goes down, it's good, but you just have those crazy drawdowns that you got to deal with. And we all know what happened in the big vol melt, but I don't think the asset under management size for these is anything near what it was in 2018 when you had Volmageddon. So I think it could be fun when the pricing looks advantageous and easy. I'm like a pair trader or hedge trader, just because I'm teaching, I don't like a lot of overnight risk with a trade, with an option trade. It's just, you wake up and you lose all your money the next day. It kind of sucks. So from a trade point of view, I like it when that price is set up well. And, when SVIX has a chance, and I think, again, I think we could see a very low vol number because we're riding this. The AI euphoria is definitely overriding any other kind of euphoria. It doesn't mean we can't go back down again, by the way, for sure. But, at this point, people need a reason to be bullish, and AI is a good reason to be bullish. The internet certainly was a good reason to be bullish for a long time as well. But I think SVIX right now it's an interesting product to trade when the time I think is right. And usually for me, that's like a bounce. We had that little pop and vol, and then it comes back. So, and I think that's kind of where it sits right now for me.
I was just looking while you were talking. First off, I can't see why anyone would choose VXX to be the product to buy your 70s in next Friday. That of all the things that just makes me scratch my head. But then they paid a dime for these things, Mr. Rock Lobster, nearly 9,000 times. They paid 9 cents for some of them, the rest for a dime of these VXX expiring next Friday, 70 calls, nearly a dime. 9,000 times. My goodness. What else do you have to have on to be willing to pay a dime 9,000 times for these things? I don't know, listeners. A lot of interesting and or head-scratching paper out there. We saw a lot of big head-scratching moves on the earnings volatility front this week. Obviously, NVIDIA dominating all things out there. It's kind of hard to talk about much else. There were others sneaking in there. Of course, Best Buy popping in there. We had Zoom on Monday. Everyone's already forgotten about that. Snowflake, all kinds of fun going on. Build-A-Bear, Burlington. We have the earnings move results, earnings season, and earnings trades reports for all of it, listeners out there. completely for free because we love you over there, theoptionsinsider.com. You could check out what NVIDIA was pricing in. They're pricing in 6.6%, listeners. They delivered, this is just in the immediate earnings move. They've obviously moved more since. They delivered 25%. So talking quite the banger move out there, listeners. Definitely our earnings outperformer of the week, maybe of the season. We'll have to go look and see and run those numbers. But just crazy town here across the board here. Again, you can see all those numbers for yourselves. TheOptionsInsider.com is the place to go. Meanwhile, we have to get on into our final segment. It is time for a little bit of the old crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. And as Jim alluded to at the top of the show, Mr. Rhodes at his 17 3/4 was looking pretty good all show long. 1784 right now. He's within a tenth of a point. And even if he wasn't, I might have just tipped the cap to him because he was there early on in the show. And I know for him, it's such a rare thing for him to get a crystal ball out there that we got to give it to him this week. So winner, chicken dinner for Mr. Rhodes. Crystal ball for him. He was also at a 17.5. Let me just make the note there so we can put it in our system so we can track our winners at the end of the year, listeners. And then also VOLQ, he was a little bit off. He was at 17. He actually was calling for the inversion, as you'll recall, listeners. He thought NASDAQ vol was going to be below S&P vol this time. Not quite coming to pass. We're at almost a 1940 in VOLQ. 17.5 was his level, so not quite there yet. But you know what? We'll give it to him on the VIX side. I'll make a note here for VIX, not for VOLQ. The meatball was at 15.51. He was feeling all the downside, not coming to pass, obviously. VOLQ at 16, no joy for him. I was at a little bit lighter than we are right now as well, which is uncharacteristic for me, but it was higher than we were at the time. I was at 16 double for VIX and 17.05 for VOLQ. So I had a tight spread of about half a point, but clearly that spread has widened out again. We're at about 1.5 points, pretty close to it right now there. So that spread widening out as opposed to going the other way. Had a bunch of good predictions. Looks like for our pro folks, Option God was the closest, 17.25, 18, 16. It looks like Option God was the closest. I don't see anybody within our 10th of a point margin of victory. But our producers will go through all of the submissions. Make sure if you're in there, listeners, and you were within our margin of victory, you will win fabulous prizes out there as we keep on rolling. That means our guest won last week. So, Mr. Jim, as our guest this week, I will give you pride of place. Do you want to go first or last? I'll let you choose.
I will be happy to go first. And, this is an interesting one because you think that something has to happen around this debt ceiling debate next week. I guess it doesn't have to happen, but it feels like something might happen. And, that could take us, that could bring a significant move in either direction. I'm going to, and the problem is, if it goes up, it could go up a lot. I remember vividly the 2011 debt ceiling being resolved on July 31st and everything exploding the week later. I'm going to say that next Friday, VIX is going to be 21.25, and VOLQ is going to be 23.75.
All right, 21.25, and then VOLQ 23.75. All right, Mr. Rock Lobster, you weren't on the show last week, so I'll let you go next. I'll let you, if you want to pick both, you can. If you want to pick VIX, I'll let you pick your poison, sir. What are you feeling for this time next week?
I'll go. I think VIX. Yeah, you know what? I think we're going to be right at the end of the resolution next week. Which is kind of hard to. Geez, Louise.
That's what I said.
Yeah. We're 1798. don't think we're going to be very far away from here. So I'll guess. I don't know. I'll guess 1725. And for VOLQ, because I don't see how it goes lower. I don't see how VOLQ goes lower from where it is here with the rate that it's moving. Although you will have like a short-term maybe skew collapse or something, but I'm going to say 2025 next Friday for VOLQ.
Wow, 3 points. You're really expanding that way. Interesting. All right, that spread, unlike what Mr. Rhodes was guessing, not inverting, but widening out there. So 2025 for VOLQ, 17.25 for VIX. So a 3-point spread there for Mr. Puddin. All right, and last but not least, yeah, I'm kind of all over the place in my head this week as well, listeners. This is a definitely challenging one. A lot, obviously, on the horizon. We could have a deal by this time next week, in which case all bets are off. I don't think so. Doesn't seem like it's that way, but you never know. So in which case, a lot of this air is going to come out of this balloon. All right. Yeah, I'm going to say probably not too dissimilar, but I'm going to say north of where we are right now. I'm going to say 18.75 for VIX, and I'm going to say VOLQ, that spread hanging out at about 1.25 points. I think that goes 20.25. So where the where the rock lobster is. So tell you what, I'll say an even 20. I'll say that spread. No, I'll say it tightens up more. I'll say 19.75. 1 point spread for VIX and VOLQ. All right, listeners. That music means we've come to the end of another epic journey through the world of all things volatility. Your markets kind of all over the place. Let us know what your markets are. I see some coming in the live chat. Keep them coming in there, listeners. If you're listening after the fact, send them in via the members hotline or, of course, questions at theoptionsinsider.com. Listens, if you're on the on-demand side, we'll get you entered into the tabulations to win fabulous prizes. And before we go, Mr. Jim, if folks want to keep up with you and all your volatility musings, where should they go? What should they do?
The best way is still to follow me on the Twitter app at VIXologist. And that's where I try to keep people reasonably well informed, and I respond to messaging.
If this keeps up, I might have to change your handle to VXXologist. What do you think?
Barclays might want some big there.
Barclays might start cutting you a check or two if you start saying, I'm the VXXologist there. Here you go. Here's your stipend for the month, Mr. VXXologist. Give him a follow at VIXologist, all one word, over there on Twitter, listeners. And Mr. Rock Lobster, do you think we've done it? Have we sated Mama Lobster? Is she happy, sir?
I'll tell you what, I'll know tomorrow after she hears the recording, you know.
She'll have other complaints. She'll be like, know what?
There'll be something, but it'll be, I will relay the information. If you get this recording out fast enough, we might even hear it by Options Oddities. So, 888-TRADE-01. Our trade desk trades vol, our pro chat room and our pro group trades vol. So if you want like a daily stream of vol trades, come to Option Pit for that. Open chat rooms. So my clients, students and I are talking all day about vol. If you're into that kind of thing, probably no better place to trade it than Option Pit in our trade desk or our pro chat room. So anyway, that's what you got. 888-TRADE-01. Ask for our customer care team, and they will set you up.
There you go. Get set up, optionpit.com. Speaking of setups, our poll right now, you folks are not giving me any information. It is exactly 50-50. And are you a buyer of the June 30-40 vertical for 35 cents? Though we do have one good comment coming in here saying there are more entertaining ways. I don't have the person's name here. Oh, Dave, just Dave. There are much more entertaining ways of burning $90,000. I can certainly see that. Go vote at Options over there if you want to make your voice heard. And if you want more content in your lives, you don't want your broadcast week to end with volatility views. Maybe you want a little bit more Rock Lobster in your life. Stay tuned. We'll be back in a little bit for all you pro folks with Options Oddities. It's been a crazy week. Is there some unusual activity to break down? Yes, there is. Are there some fun trades to talk about? Yes, there are. We'll find them all on Options Oddities coming up in a little bit. TheOptionsInsider.com/pro is the place to go to join that fun party. Otherwise, that's going to do it for us on the on-demand side. Everyone out there, have a great, a safe, a fun holiday weekend. Remember, no option block or crypto on Monday. Markets are closed, at least for U.S. markets. Crypto, I know, is all going all the time, but I can't make people work when the markets are closed. I'm not a monster listener. So back again on Tuesday with our pro content, all the rest of our content next week, all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.